Hello everyone, welcome back to Make Money Online. Today we'll be talking about Palantir stock and how investing in it now can give you huge returns on your investment. In September 2020, the hot topic in the business world was the initial public offering of big data and surveillance company Palantir Technologies. The tech startup offered its stock to public investors for the first time. The company obtained a direct listing on the New York Stock Exchange, and it was highly anticipated. The publicity gave investors the chance to capitalize on a business that happened to launch one of the most hotly anticipated tech IPOs in years. It was founded in 2004 by billionaire tech investor Peter Thiel. It's a surprise people are just hearing about it now. The company operated behind the scenes and has been thriving ever since its IPO. Operating as a data mining and analytics software provider, the company made its shares available for sale to public investors late September 2020 under the name Pltr. Before this, Palantir Technologies published a document declaring its financial stance to the public. This enlightened the public about how it operates, its target customers, and how it administers its operations among its several committed and loyal customers. Only downside is that it didn't seem to have a large customer base prior to its first public offering. This left analysts questioning its capability to keep up with other established tech companies in Silicon Valley. However, some high-profile optimists believe that Palantir can double its customer base and its revenue in the next 18 months. Palantir invested in a product that is much easier to sell and deploy, given that it is customer-specific. Its investors concentrate on what the company calls its contribution margin, or the revenue left after subtracting the costs it bears to generate sales. That number climbed to 55% in the second quarter of 2020, from 18% in 2019, and it's expected to rise even higher. It generated an average revenue per customer of $24.8 million last year, while having only 125 customers, spending on average $5.6 million in 2019. Its customer base was restricted to a class of corporate and government customers, a relatively small number for a large publicly traded tech company. This, in fact, can be considered as a limitation. In reality, some of the world's most successful tech startups create products and services that are generally applicable for individual and corporate use. It meets an immediate need, and this forms the basis for the foundation of the company and its generic products. Palantir, however, thrives on a series of government-funded contracts, which can be as unreliable as it goes. Some of the roles for which it has secured contracts range from spotting terrorists to analyzing payroll and so on. It signed a lucrative business deal with Immigration and Customs Enforcement to provide digital profiling tools to the federal agency for apprehending and deporting undocumented immigrants. Though the government-backed contracts provide more than half of its income since its establishment, there have been several attempts in recent years to establish a new business outlet for serving corporate customers. In another of its major successes, Palantir overcame competition with Raytheon to earn prime rights as the sole provider of a top battlefield intelligence system for use in the Army in 2019. The company has made a name for itself by serving top global organizations, but there are concerns about its ability to scale because it has been limited to the government contracting business. Though its services make it stand out amidst its peers, it becomes imperative for the startup to find a way to streamline its services and products so that they can be accessible to regular customers. Tapping into the millions of potential clients in the world's population will provide a major boost in the fortunes of the company. Another noteworthy fact is that Palantir is still one of the fastest revenue-generating tech companies, though its profit margins are below typical software companies. Palantir is valued at about $20 billion and is often mentioned in the same breath as other business software makers such as Splunk and Elastic. At this stage, it seems like a great time for public market investors to bet on the company's growing fortunes and avenues of growth. Growth was expected to rise above 40% in 2020 as COVID-19 related disruptions increased demand for the company's services. Much of this growth came from their activities in the government space. Government revenue expanded to about 76%, while its commercial revenue grew by just 26% as the company progressed over the years. It has achieved impressive growth outside the public market, and investors can count on its increased potential. Predictions before the initial public offering. According to the information provided by the company, its shares started off trading at around $10, based on a diluted share count of 2.2 billion as of June 30th. A $10 price per share meant the company could attain a $22 billion valuation. It was also noted that the value could rise to $25.4 billion if there's an account of up to 341 million shares and other forms of securities, such as stock options and warrants. About 475.8 million shares were revealed to be available for sale on the first day of trading. That's the total accruing from the sale of 1/5 of the holdings of the private investors. Following its initial entry into the market, Palantir enabled its existing investors to sell their shares instead of raising money in a stock sale. The shares were immediately floated on an exchange. This spiraled into active trading in the private market. The shares went for between $4.17 and $11.5 this year. Comparing Palantir to other software companies. As a growth-stage tech startup, Palantir's valuation may not be as high as those of the richly valued, publicly traded crop of software firms, such as Zoom Video Communications and Datadog, who both carry a forward sales multiple of 59 and 48 respectively. However, with revenues picking up this year, Palantir's net margins should also rise in the coming months. Palantir stock prediction. An initial public offering represents a business's first foray into the global market. That is, the ability of the public to invest in the future of a company. Before its IPO, Palantir Technologies bankers reportedly predicted that the company will be granted a steep valuation when it starts trading. This expectation would place its valuation at more than $25 billion after accounting for recent stock and options grants. Palantir's revenue rose significantly to 49% per year in the first 6 months of 2020, and it was predicted to grow between 46% to 47% in the third quarter of the year, while its full-year sales guidance could grow as high as 41% to 43%. This suggested that the company's primary boost could decline in the fourth quarter and by the year's end. However, in 2021, Palantir's revenue growth potential is predicted to be greater than 30%. Palantir's bankers predicted its revenue to attain between $116 million to $126 million in non-GAAP operating income for 2020. This is excluding the expenses incurred from sponsoring the $54 million for the direct listing, as well as stock compensation, which totaled $182 million just in the first half of 2020. Technically, Palantir chose the right time to go public. Palantir is currently valued at about $15 billion, or about $9 per share, which is about 14.5 times the projected 2020 revenues. Besides, the company's margins are expected to dramatically improve as it aims to closely emulate that of regular software companies. It was gradually shifting away from being a purely governmental consultant company to a corporate service software company. Things are looking good. Concerns for Palantir stock. The first major concern is that Palantir stock cannot scale as much as other software company stocks. Other software companies tend to indulge in upfront expenses to primarily develop and maintain their products, which will help them scale up to a large number of users and have low customer acquisition costs. Palantir software, on the other hand, requires a lot of customization by Palantir engineers to adapt to the unique needs of customers. Its user base is also concentrated. For instance, sales and marketing expenses stood at 61% of total revenue in 2019, with general and administrative costs standing at over 43% of revenue. This significantly impacts the company's bottom line, with its net margin standing at negative 78% in 2019. Its relationship with the government on the issues of national security can also come with transparency and perception issues, which could scare away potential software investors. There's a lot of secrecy and controversy around the company, even though it impacts a lot of people. Investors always want to look at opportunities that keep them informed. Given the fact that it dances around the military market and with the potential of defensive concerns dying down, defense spending could decline, as many defense companies and government contractors tend to underperform. Palantir still has room to grow into the commercial space, with its total market standing valued at about $56 billion. Investors might require more convincing proof of progress in the commercial sector via high-profile deals or stronger revenue growth. Should you buy Palantir stock? Palantir is expected to continue to grow in revenue and become more profitable. There's an increasing demand for companies that can help manage massive amounts of data generated by companies through many parts of their business, such as marketing, sales, customer service, software, operations, technology infrastructure, etc. Palantir has large gross margins, impressive revenue growth, and a product that sticks, which makes it an attractive goldmine for potential investors. It has many government and military clients, which leads to many contracts that are less prone to corporate contracts. It functions as one of the first companies in the space since it was established in 2003, and it keeps developing its technology. While the company's working at becoming more corporate-suited as a tech company, in reality, For now, it's more of a defense company that uses software as its means to help its customers accomplish their goals. In the current economic state, Palantir stocks with high growth and margins will likely lead to good performance, especially with customers, as its recurring revenue should continue to increase. We hope you enjoyed this video. Don't forget to like and subscribe, and check out some of our other great videos. What other trending stock news would you like us to talk about? Let us know in the comments. See you next time.